The US stock market is facing the triple threat, and in less than 24 hours, we're about to find out what's going on with the inflation data. It's expected to go up drastically. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos together. The iPhone 15 event just happened, but the stock market didn't react super positively. We'll break down what's going on, we believe, with that and more. But Dow Jones Transportation Average has to be on our focus list. Another new low is about to form. If this occurs, it usually sparks a big problem for underlying stocks. We also have dark pool liquidity that we need to discuss, trillions of dollars of options expiration, and of course, central banks. What are they doing? It looks like there's an injection coming back into the markets. Tesla stock gave up some of its gains, but we've got a lot to discuss across the world. Well, welcome back, everybody, to the Daily Show where we discuss macro lead indicators and the hottest charts. If you'd like anything to do with markets, make sure to subscribe and ring that alert button. So let's discuss the big outliers. Oracle down 13.5%, a massive sell-off in that particular stock. Semiconductors also struggled along with big tech. And then, of course, we have energy making a rebound along with a few other inflation-based trades just before the CPI data of the month. But let's take a look at one indicator that we've been using a lot recently, the bullish percent index. We talked about how when we see these small rallies, we tend to have what we call a dead cat bounce or a false rally. Now we've got a new low on this particular market, and it does lead us into the potential chance of a capitulation story. If we see a turn such as these ones where we get a bunch of nice big green candles, or in this case white candles, then we'll be very positive on the markets once again. And at this stage, of course, remember to subscribe and follow along so that we can update you when that does occur. Let's talk about the weakest month of the year. We know that September is weak. We already talked about it. We already also discussed that generally speaking, the Friday, that is the option expiration day, that's this week Friday, tends to have a negative correlation with it. And then there is usually a pretty strong negative correlation with the week after, the post-OPEX or post-quadruple witching event. We will talk about where maximum pain for the market is later on in today's video, so stick around for that as we cover indices. But here's the S&P 500 as well during that time. And of course, here is the September 9 to 19th run and September 19th to 26th run. There's a big statistical range that tends to happen over this period. Here's a nice chart that we got shared through our Discord community, which of course you can join for free or join our private one down below. And you'll notice here that there is a sequence of 7 consecutive negative NFP report revisions. I tell you what, it's a joke, isn't it? Every time we see these non-farm payrolls, which is the jobs numbers coming out of the US, we keep getting negative revisions. The only other time we've had such runs, 2008 and 1985. Yeah, that's interesting because both times, of course, we were in recessions or we were in problematic markets. And we also tend to have a lot of yield revisions around that time as well. So we had, of course, inversions, US 2 versus US 10-year. I'm interested in seeing this chart, update on this tomorrow as we see new survey results coming out. Is everybody still very bullish compared to the bears, or have the bears returned back into the survey results? We do like to use this as a bit of a contrarian indicator, and of course we'll have the update for you tomorrow. Let's also discuss the end of this month. As we mentioned, it does tend to turn after that post-OPEX kind of period, and we tend to go into the worst period of time. Again, look for this in price action. And if we move underneath a key level for the S&P 500, which will be 4330 on our charts, then we could be exposing ourselves to a 4200 and 4150. We'll kind of explain that as we go through today's video. But I want to discuss dark pool liquidity. There were a couple of interesting trades, and I think you'll be surprised, or maybe not surprised, where we ended up on the Qs just before the inflation numbers. See this 68 reading? This most likely happened on Friday of last week after the close. A little bit of a sneaky transaction that went through after the close during the market conditions. Now, that price was around 300 or 372, maybe 50-ish. If you take a look at the Qs, which we will look at later, we basically hit into that level. So will we find defense around this zone for the bulls? You can see here the read where we found it. We can also see there was a large transaction that was placed. Again, we found out about it after the close. So we found out about it a little bit late in terms of the reporting that happened up here at the highs. I wonder what they were doing up there, probably selling Qs, yeah? It was probably pretty likely based on the price action that happened after that. Then we go over to the S&P 500, some unusual reads coming through during the rally of the session yesterday before we saw the sell-off, and that was a significant zone. Now, this is the Vanguard S&P 500 ETF, but basically there was a bunch of selling that came out of nowhere there. We have to assume it's selling based on the current price action, and we already know that based on the SPY, which is of course what most of us trade when it comes to S&P 500 ETFs, we got a lot of trade right around where it was trading yesterday. So again, a session here, or today for some people in the US, this was a session where we basically had a market that was very much selling, you would think, or at least some people were positioning towards sales at those key zones right around where we thought that gap fill might occur, and it led to those positions of weakness. But that doesn't mean that the markets are going to continue to sell off. We need to go underneath some key levels that we'll look at later on, because that's going to be most important. What about options this week? We know it's quadruple witching. We know everybody's discussing options because it's key, but the volumes were really low. Tesla, of course, everyone was trading that one, still over the normal 90-day average. We did also see Nike come through with a 1.46. I've been talking about this stock a little bit on our live streams, so that's an interesting one. It's getting down to a kind of a juicy price, but no turn in that stock just yet. And then we had some of the normal favorites here. I continue to see iShares Silver Trust coming through with a lot of trade on it, which is interesting, but Disney was probably the best one, 1.16. Have we seen a turn in the stock? Well, we'll update you on that as we move forward at some of the key levels. Calls, 53%, puts, 47%, still a buy the dip type of mentality here in the options market. And we're not seeing a huge amount of put stacks, which is pretty important. And once we get past this week's maximum pain, you'll see what I mean. Let's move over to the last 24 hours and the last 5 days. Last 5 days, best market sector. Wow, utilities, actually a defensive sector. Healthcare and staples were also up there. For anyone that's been watching for a while, you'd know that if we tend to see 2 or 3 days of strong defensive buying, that usually means weakness is coming, especially during a nice dead cat bounce style rally, if that is what it is. This time around, though, we haven't seen that. Even though utilities is the strongest sector of the last 5 days rotationally, it's not the strongest sector of the last 24 hours. It's in the middling ground, and staples and also healthcare were pretty lackluster. Energy came back. Solar's doing pretty good off the lows down here. And there was a couple of other plays that are all inflation-based. In fact, almost all of these top sectors were all inflation-based sectors. Metals, clean energy, solar, agriculture, a lot of these ones do tend to do okay during that type of event. So what does it all come down to on the charts? Let's break down these charts into this biggest period of volatility. First up, we have to be focused on yields. US 2-year, it approaches the 5.1%. Current trend is, of course, towards the bullish side on yields. And if we do break into what we call the fear of the unknown, then this is where the markets may actually just start to get scary. And if we do see a market break past 5.1%, then the markets actually go bullish. I don't think that's a real move. Often when we see news events, their first move can be false, and you can kind of tell when it goes against everything you're thinking about if you've got a replicatable setup. Watch the US 10-year, 20-year, 30-year as well. They're all at highs. Make sure to set your alerts and be aware of when that happens. Now, if we do end up getting a break of yields, what's going to suffer? Treasuries. Treasuries look terrible on weekly still, and we still think that there could be a wipe. Everybody was talking about buying treasuries down here. So I think it would make sense that the market might want to have a go at this level and potentially take it a little bit lower. 88.90 could be a key zone, but we've already marked out here as well where the bulls are back in control, somewhere around 97.38. So certainly some key levels to be watching. I'm excited for treasuries over the next 6 months. The volatility of the volatility slightly spiked up, but not enough move there. The VIX is on the increase though. So if we have a look here, it's 14.24 into inflation. If inflation numbers are a fizzer and the market don't get scared, expect this to drop right back down. I could see us going to a 12.12 over the next couple of weeks. But at the same time, if we do get a lot of volatility, it'd be nice to see the VIX actually mean something again. It's been a long time. Another index that we're checking out here is, of course, the percentage of stocks below the 50-day moving average. We made a new low here, so we've kind of got that rally into the drop. Now, if we have a look, traditionally when we're dipping, these are the dips, March dip and September dip, and of course June and August dips and other things like that. When we saw these dips, we like to go kind of into that 25 to 20 range. So we're not quite in what I would call a capitulation market yet, which is really showing us the weakness. We do have, of course, the overall 20 moving average. So this is the percentage of stocks above the 20 moving average, was dropping down to 39, but it did spike a little bit in the last 24 hours. We're looking for that to get back down into these lows underneath 30. And of course, we're looking for the S&P 500 to break under there, under 43.30, to really give an exceptionally good forward PE style multiple. As you know, if we've been following, we talk about forward PE style multiples if we're looking to the investment side more than the trade side. The Dow Jones Transportation Average, often considered a potential precursor to problems in the market. We have got this going down, and it's been weakening here for a little while the market's been pretty stagnant. So we got another day down here for the Dow Jones Transportation Average, and it hasn't made a new low, but of course we will be watching this over the next 24 hours. Another one to watch, and we did this on our live stream, special live stream for the open, was of course home builders. So if you load up the home builders ETF, it's another one that's starting to show a little bit of potential topping out. We've seen a couple of large trades go through it. You can see the volumes here that we're starting to increase. If this starts to drop, that's going to be a negative for the US economy. At this stage, it's been incredibly strong, and you could almost put this behind the recovery. So why has the recovery been so strong? This chart is a huge component of both the sell and both the rally. A great one to have on, and certainly to be focused onto it. You can see here the flow or momentum has also been reducing down the low. Let's take a look at the Magma, which is, of course, some of the biggest, most powerful stocks. It's not the magnificent 7, but certainly in the magnificent 4 or 5 here. So we've got some big stocks. Apple was a bit lackluster. The whole stock market actually ended up selling off. So we saw that new high kind of getting rejected. And a lot of eyes will be on how this closes for the weekly, because you can see the previous week was a long leg doji. So if this ends up bearish, maybe we will go under the 20 moving average. A lot at stake here, especially when we know the stats going into the post-OPEX week. What about positives? Well, we saw some really nice movement on metals. Iron ore in particular broke out to a new high. Of course, it hasn't held it for the week yet, but that's showing you that the market is at least anticipating a bunch of Chinese stimulus. And we're seeing relaxation of all sorts of things over there to try to get the market stabilized. And again, I think this is just a good representation of that. Same with copper, if you're watching them. The US dollar did as we thought, but it still is not out of the ballpark yet. We saw the rally. That's exactly what we expected. Where it sold, perfect. That's a great move. And now we find ourselves in a situation, as I explained on the Tuesday market open, I'm bearish here and randomly bullish here. Now you might think, well, how can you be both? Well, as a day trader, sometimes you look at a level and you say, well, both are pretty good zones. So of course, I could see why someone would buy here with stop losses below the low, and I certainly know why people would sell here with stop losses above the high. Now, it could be that you want to break even if you're a short here into the news event itself, being the inflation numbers. That's fair enough. But at this stage, we do have a technical turn that is a bit of a 2-hour turn here towards the downside on the US dollar. Will that continue? We'll find out. And we have a smaller, more like 1 hour, 15-minute turn towards the bull side. So we've got both bullish and bearish things. If you want to see who confirms, it's going to be a monster squeeze if we get past here on the daily, and we're going to move to next levels on dollar, which we'll look at. And if we end up closing below here, we could be moving all the way down to like a 103.50. So let's break down the daily here. And you can go back and watch our Tuesday. I think it's around the open of the actual market. We talked about this particular thing as it was occurring in the market live. So dollar index, we're looking towards it. If it gets a new high, probably going all the way to 105.64. And that'll be a pretty nice move, and possibly even then going towards the 106.85. That's going to be one of the triple threat issues that we are facing in the US economy right now. Of course, we've got high yields, big problem. And then we've got dollar index strengthening, and definitely an issue that we've seen before. And the last one's going to be oil that we'll take a look at soon. Now, here is gold. It looks terrible. That's a tweezer rejection. I don't really like gold spot at the moment. I've talked about it. It actually tends to have a very negative correlation with it. I'll do a special on it soon, but I think it's like a 0% gain over the next 30 days, over like 15 years or something. It's some ridiculous stat. Though gold stocks held up a lot better, and we'll see that in a second. So here's gold, And gold spot looks like it could be going back to 1890. That type of tweezer rejection is usually relatively strong. If we do end up getting a close above here, expect squeezes to new highs. I think that would just absolutely squeeze so many people out. GDX made a recovery. So as I said, gold spot down, gold stocks, not so bad. Did we close above the highs? No. Did we close above our yellow line? No. So we find ourselves still in a bit of limbo here, but I can see why people are buying this zone. It is a pretty good technical level. We'll find out whether it can hold through the inflation numbers. Then we come to US oil. It's still grinding higher. We expect this to continue on. I'd like to see it go 90 to 92 a barrel and then have some problems. We did a poll of the community on, I think it was either yesterday or the Monday, and basically we found that we had, I think most of you guys, over 50% of you thought that we would be above 90 over the next 2 months. So we'll see whether you're correct on that. That's what most people thought. I tend to think it's more like this that'll probably happen, but you know, if we're in stagflation, you could be correct. And at this stage, you know, we still think that up here is where the problems lie for oil at this initial rally, and I don't see it stopping until we spike into those levels, but inflation numbers will no doubt be a huge rider into that. Now let's move into the sectors and the single stocks before we go indices. Semiconductors had another fairly weak kind of session. You can see here they're weakening. This looks like a distribution pattern. We've seen some large trades going on here. To put it in context, because that's everything, we're back at those highs from 2021 before everything got bad, and it does look weak. But we haven't actually changed trend in terms of swing traders. They're going to be looking at this low down here and saying, well, I want that to go low. Now, if markets come out with a big bull, guess what this would be? We open up high, we'd have an island reversal. Now, by itself, islands aren't that great, but what this is it's part of then you're starting to say, well, maybe this is accumulation, we've got a trigger. We're going to have the patience to react and not predict in this case, and of course, we'll need to be very, very on top of it. I think it's better not to predict this and to see how the market plays it out. Disney, everyone's talking about this stock. Have we done the turn? We found resistance right at that like previous high, which is 84.80. I don't think we've found the turn necessarily just yet, but the mouse is low, and I mean seriously low. For investors, I don't even blame them thinking about this as a good level. It tends to be a fairly weak period for Disney, so no surprises. And I thought we would take this low at some point in the future, and it would be something we will alert you on the channel. So if it happens, we'll be there. Tesla, bit of weakness after a super 10% day. Morgan Stanley really rallied this stock up. And then we put in the shooting star or the pin bar rejection. I'm not really too sure what to think about this stock at this stage. Look, the weekly will be super important. We do have that closure above here, which I think is bullish for pullbacks at this point. So you've got to kind of think, well, if we get back in here, let's say we give up that 10%, we get back into this structure, there could be a nice bull position. I'll update you on which area I think is best in here after the next 24 hours. But yeah, basically, it's a pretty strong movement, huge amount of volume. The only problem, as we mentioned in the previous video, is it's probably us doing it. It's retail. It will be a few funds, but you know, realistically, the funds were the ones that pushed it there. They just went, okay, it's worth $400 now. Okay, great. Well, if that pushes the stock 10%, will it be able to hold it? Sometimes it does, sometimes it doesn't. We'll be looking at key levels, but for now, you're looking at probably, people are going to try to fade this, looking for new lows to be formed underneath with stops above. Inflation numbers will be key on this stock. Apple, I was disappointed by the event. I got to be real. I haven't been excited for an iPhone in a while. I don't know what you guys think. Let us know in the comments down below. The new chip in the Pros and the Pro Max looks pretty good. The titanium, maybe it's lighter. USB-C should have been in there years ago. So really no flip phone, no any of those types of innovations. And I thought it was a bit lackluster. The improvements were just the same incremental improvements that tend to happen. But the Apple stock didn't react too positively to it. I think it was down more just because of the session itself, still holding below that 20 moving average, okay? So the 20 moving average here seems to be a bit of a resistance. And if we make a new low, the biggest stock in the world, look, we've got a little alert down here, 171.74, I've got an alert. If that happens, when the big stock goes, it's like a canary in the coal mine, yeah? It's usually a big issue. AMD is another one that we're watching here, which is on its trend line. Take a look at that daily, right on the trend line. Look at this. It rejected up here. If it gets through that massive trend line, could AMD be going back down to the 84s? I think it's very possible. And of course, this tends to weaken, as we mentioned in the last video, early. It's weakening early here. It weakened early back in 2021. It weakened early every single one of the drops. So AMD is kind of like Apple. If this stock goes bad, often it means there's a little bit worse around the corner and potentially a new low. CQQQ looks much better. Of course, we know that there's some form of defense here being played by the old central bank over in China. They're clearly doing something here. I don't know what it is, but there seems to be a bit of policy shift. Markets seem to be weakening. Now, this is interesting because the German market put in a really nice close above. Was that a trap close? I didn't want to trade it. I mentioned that I'm looking at the S&P 500 the most closely here. I smelt the trap as a potential. I don't really know what this market wants to do, but I can imagine people are buyers here, and I don't blame them for being buyers. I just think that all things considered, it is a trap potentially because of the overall distribution that we've been seeing. The BC, the UT, the UTAD, the sell-off, the rally into supply, the sell-off, and the weirdness here. So this is all about inflation numbers out of the US, even though it's the German market. I don't like what I'm seeing at this stage, but we'll have to come back and find out whether we can get a new high. The Australian market is in the defenders zone, so I don't know what it's going to do just yet. We will update you when we find out more. If the weekly close like that, not a good sign. At this stage, we know there's some buying liquidity around 71.30, and yeah, it did pick that up over the last 24 hours, and it's kind of there at this time. So if it's going to go bullish, it's right in that zone at this stage. US 2000, the Russell 2000, the small caps, it looks bad. It looks really, really crappy. This is not the market that you usually want to buy, but we know that we're coiling ahead of a bigger news event. So, of course, it makes sense to be trading around these defended areas. And if we broke below, how low can we go? Well, quite low, I think. We'll go basically all the way back into this structure, possibly even 1750, which could expose, again, 4150, 4200 for the S&P. Let's move to the Qs. What's going on in the Qs? Not much. That's actually a very hard chart to read. But if we have a look at the futures, we can see here that we got that 61.8 reversal. So that's where we thought the bears could sit based on structure and everything else. They sold it off. They made a new low. At this stage, it looks like you could make two cases. You could say, okay, around here is buyers. And if we rally to around this week here and the 20 moving average here on the 2 hour, about 15.4, there's sellers. So it's kind of like the dollar. There are buyers and sellers at critical zones. And this is going to be another one that might be patience, react, don't predict. Look for the first move, look for the rejection, and then you can say, I played chess with you guys. I know what you're doing, and now we're going to counter. And of course, that counter will hopefully be the right direction after you've seen that. Here are the gaps on the S&P 500. We didn't quite get the 44.96 gap fill. Interesting. And then we did get the gap fill here to 44.57, which is from the Friday close. So we can basically delete that one now. And then we can say, okay, look at this. But what I want to do is use futures because I want to show everybody what's at stake here. The daily 20. Now, did we rock that thing and find buyers here? Yes, 3 weeks. Okay, 3 weeks. We've seen selling, we've seen selling, we've seen selling, we've seen buying, we've seen buying. It seems to be like the magnet for the markets at this stage. Now, you could make a case right where this is here that it's hitting the 20 ahead of the news and then it could rally straight back up. You get a new high in this point. I'm not sure the bears will be able to sell that thing off very easily unless it's an instant wick sell. So basically, if we get above 45.40, which we've been talking about, I think there's a new high coming. And that's how much is generally at stake here in the technicals. From a buyer's perspective, people will like this level. It's obviously a gamble. That's how it is. And if you are a seller, you're going to like what you saw in the previous session because you're now looking at, I just want to close underneath the 20 on the daily. Then we can start pushing down to the 43.30s again. And obviously we get underneath 43.30, 4,200, 41.50. And if we reach those levels, let's just say that happened. Some people would say miracle because they want those prices. Some people would say it's a horror show. If that does happen, we're going to get most likely underneath 17 forward PE. And as we know, that is not too bad if you are a bull from an investment's perspective. Of course, there are several risks and there's only one metric, but yeah, some interesting stuff looking in here. Let's go back to the 2 hour chart. You can make cases both ways. At this stage, it has kind of turned towards a little bit of negativity, but this is where the bulls sat last time, and I still think they sit somewhere around here. And if we end up getting a new low, well, as we said, we're probably going towards that 43.30 zone. Let's move to Bitcoin. It looks a little bit better. I put a little green box here. So actually the bull case kind of happened last 24 hours. It took a new high. Okay, cool. It came back. Cool. And then we trade within the range. And the biggest problem with this is if you were looking at this and you were saying, oh, how do you replicate this? Maybe you would be a buyer here or around this level. The CPI numbers could completely obliterate that, which you know, so it's a risk. And that's why you always have to have risk management in your trades. But that's a first positive sign in a little while. We took a low. Good. We probably got a lot of people shorting down here, which we squeezed. If I was the market, I wouldn't want to let them get out. So could this be a turn point for crypto? It could be. I could be absolutely, completely wrong here on this one. It's what I would call like a coin flip for a 2-to-1 style trade. And if it does end up rallying, where's the next level? Well, it's most likely going back into this green box area up here, which is where we've had a lot of trade before historically over the last couple of months. So yeah, I guess, you know, from all things considered, you'd be like looking at this going, oh, it's not too bad. The rejection week obviously is fairly significant, which means that there was some kind of heavy selling going on there and profit targeting, but we're back in that structural range. So I think crypto is getting exciting again. It's small time frame. We'll have to find out. Let's move over to maximum paying, quadruple witching, trillions of dollars at stake. It seems that 440 is a bit of a problem. We're trading at 446 at this time of this recording. So basically, we could easily sell to 440 and not even pay anyone out really in the options world. We've almost got 3 million open interest. So very, very large options expiration for quad witching. And we know that, of course, 430 should be the base because there's no way we should get through that easily. That's too much of a put wall, as we call them. Call walls sit at 450 and 460. Unlikely we get above those by the end of the week. Again, it's just speculation. But at this time of recording, with the information we have, 440 would be the perfect close zone for Friday. That will update, and we'll update you as it comes through. Big information, 1 hour before the market opens is the CPI number. Don't be surprised if it goes up. It's expected to. So remember, the forecast is 0.6%. Last time it was 0.2. So when everyone's like, whoa, it's gone up. Yeah, well, that's what everyone thinks it's going up. It's not. It doesn't take a rocket scientist to see that energy has been increasing. But then we move over to some other information. Thursday, we've got core PPI. We've got retail sales. Very interesting result. Expected to be a little bit weaker here, 0.2%. And of course, then we go into the Friday with the Empire State Manufacturing Index and prelim UOM consumer sentiment. So a lot of news coming out the back end of this week. Huge amounts of options expiration and a lot of volatility expected to finally come back into this market. If you are interested in attending our event, new announcement, we've actually got a live stream of our Vegas conference as well set up, which of course you can get. Links in the description down below if you're interested. And you'll get a full recording to that as well. We've got over 11 world-class trading experts coming. I'll be doing a speech in something that I've never talked about before, which I think everyone should be watching if possible. And then, of course, if you want to attend live, we've got both a session ticket availability and, of course, the whole dinner and lunch and everything else as well. So if you're interested, check them out. There's still a couple of tickets available and everything going on. And I'd love to meet you and, of course, the rest of the community out there. I think it's great to catch up with people that are always, of similar mindsets, and that's going to be good. And don't worry about the whole September 12th thing. We'll extend this a little bit more, so you'll be able to get all the recordings as well. Thank you so much, guys. If you enjoyed today's video, remember to smash the like button, the subscribe button, and the alert button. And we'll see you in the next one. Bye for now.